Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market cipher. But first, I want to look at the bear market, comparing different coins here and the percentage drawdown from the all-time high. So we are using the second peak for Bitcoin here in white, and in blue here is Ethereum. And we are on the weekly time frame, and this does pretty much mark the peak for all these coins. So just looking at Bitcoin in white, we can see we are currently down 75% and Ethereum is down 73.6%. And on this initial drawdown here, we did see Ethereum dropped lower than Bitcoin. It was down 76%, while Bitcoin was down 70%. And now they are pretty much at the same level. And that also explains why Ethereum did make a higher low here on this most recent pullback, while Bitcoin made a lower low. Pulling up Link now in purple, Link is currently down 78%, and Cardano in red here is down 85%, while XRP in a lighter red color is down 67%, and BNB in yellow here is doing the best, currently 54% down. So we do see a bit of a spread here, with Link and ADA doing the worst, Bitcoin and Ethereum in the middle, and XRP and BNB doing the best, taking it from the all-time high, with that range going from 54% down to 85% down. But over to Bitcoin now, we're going to look at that comparison again between the 2014 to 15 bear market down the bottom here and our current bear market at the top. We have been comparing these two, taking it from the overall peak of Bitcoin, which many saw as an overactive dead cat bounce, as a lot of the indicators indicated this was the peak, and comparing that down the bottom to the 2014-15 bear market, where we did have that blow off top, which was missing with our most recent bull market. And we're drawing the falling wedge here from this dead cat bounce and lining that up with the peak here on Bitcoin. And just zooming in, we have those falling wedge patterns drawn in, and we have lined up the peaks of each of these dead cat bounces here in the 2014-15 bear market and our current bear market. We do see that they do line up quite well here. And although we did make a lower low here compared to the previous low, while in 2014-15 we made a higher low, we do still see that they do look quite similar. We are still above this trend line connecting the overall peaks. And if this were to play out, getting another dead cat bounce here, we would expect that to happen going into the end of the year. Whether we make a higher high from this point or not, I would expect a bounce going into the end of the year, and then maybe one more drop back down, with the actual bull market starting perhaps sometime towards the end of March here. And this is where the bull market really started, in the 2014-15 bear market. And just pulling up market cipher here, looking at the money flow, we are on the 4-day time frame on both charts. We also see the top of this falling wedge is where we entered the red money flow. And when the bull market really started to kick off here, we entered the green money flow. And that does line up with our current bear market. We entered the red money flow here at the start of the top of this falling wedge. And we think once we get back into the green money flow, the bull market will really start. And again, if we do a similar thing, that would be around March 23rd of next year. We do see this red wave is quite low here. It is still a higher low compared to this low on the money flow. And we didn't see it come quite as low here on this pullback. But we'll have to see how that plays out. There is still around 4 months in this space for this to come back around and eventually come back into the green money flow. And just turning on the rest of market cipher here with the green and red dots and the blue wave, we do see how similar it is with the peaks and the lows here. Sometimes it was just one green dot that caught the low. On our current bear market here, it was 2 green dots. But we can see how similar they do look. The blue wave did cross above the 0 line here. We got that red dot and had a pullback. Also on this occasion, the blue wave went above the 0 line. We had a red dot. We had this pullback. And we had another bounce where we came close to the 0 line, had this red dot. On this occasion, we had 2 red dots before we came down. But we can see once we did get this green dot here, it did initiate that next dead cat bounce. So we're looking for a green dot here on the 4-day time frame. Perhaps we get a couple of green dots. It's a bit more choppy. We are getting quite close to a green dot here on the 4-day time frame. And if we get that, we'll be looking for a bounce coming into the end of the year. And this was quite a significant bounce here, but we'll have to see how this one plays out. But onto the weekly time frame now. We do have these two order blocks in blue from these two red candles in the initial run up in the bull run. Once we did break below these order blocks, we did drop from that 18K down to 15K. And we have pretty much been going sideways since then. We're above this falling wedge structure, and just zooming in a bit more closely, we can see we do have a channel pattern here with 2 touches on the top, 2 touches on the bottom, alternating touches. And as mentioned, we are pretty much just going sideways in a range here. And just pulling up the VPVR, the amount of volume traded at certain price levels, we do see obviously this big spike here from all of this price action, and a spike further down here at around 16.5K to 16.6K. And this is the area where we have been getting resistance on these weekly candles with these wicks. So ideally, we want to see Bitcoin close back above this cluster on the VPVR. To do that, we need to close back above 17K. And if we do that, there is this gap on the VPVR for this current range. And we could possibly see us come back up towards this order block between around 18K and 19K. Have to see how it plays out. We could get resistance from this spike on the VPVR and get pushed back down lower. We do have some bullish divergence on the weekly between this low and this low. We see higher lows on the RSI while making lower lows on the price action. And we did have that bullish divergence between these 2 points, and we did see a bounce play out from that, even though we ended up coming back lower. This is even more of an exaggerated bullish divergence with quite a big difference between the lows, while still making higher lows on the RSI. The stochastic RSI has come all the way down here. And again, we need to see it get above this dotted line, above the 20 level, to give more confidence that we are going to push higher with a bounce. And this could take a little bit to play out. We have only just come down here. So we could go a bit more sideways for a while, or perhaps even test the lows again. The total crypto market cap here is similar. We have that channel inside this falling wedge pattern. We did get above the falling wedge pattern here, which is more of a channel on the total crypto market cap. Then we did drop back below it, and currently we're at that trend line. We did also have this yellow box drawn in, just encapsulating this range on the initial run up in the bull market. And it just captures the wick of this candle and the top of this candle, as we did consolidate here for several weeks. We can see on this pullback, we did come to the bottom of this yellow rectangle, and we did test it twice, and currently we are still inside this rectangle. And down to the daily time frame for Bitcoin now, we have that same falling wedge and also this channel in yellow drawn in. We see a similar thing on the VPVR, where we do have a big spike here where we're currently getting resistance. And again, we need to get back above 17K to clear this level. And if we do, I would expect us to come back up somewhere around this area between 18.3K and 19K, where previous support here might turn into resistance. And we do also have a bullish divergence on the daily here. We see lower lows on the price action while making higher lows on the RSI. And we are still above this trend line connecting the lows. But just zooming into this more immediate price action after this big drop from 21K to 15K, going down to the 4-hour time frame, this was that big drop from 21K to 15K. We see if we do line up the peaks here, it does have several touch points on the top line and a couple on the bottom. We do have this parallel channel also inside the bigger channel, and the midline seems relevant here. We did bounce off it on this occasion. We didn't quite pull back to it on this pullback, and we are pretty close to the top of this channel at the moment, which is sitting at 16,530. And again, we are on the 4-hour time frame. Just to zoom out to show you what that looks like, we have this larger channel here, and we are in this smaller channel after this drop back down. Just pulling up the VPVR from this more immediate price range here, we do see the biggest spike on the VPVR pretty much at the top of this channel at 16,530. So this will be the key area to get back above and also break this channel, perhaps test it for support. If we're able to do that, then we would expect a move higher, in which case we might form another channel here, or perhaps some sort of a rising wedge which breaks back down. But back to the daily time frame now, we do have some order blocks here. This one higher up at 18.5k, which was the support here on this consolidation. This would most likely turn into resistance on the first attempt here if we were to get back up to this level. And then we have an order block further down here at 14.5k to 15k. If we were to spend longer in this channel, perhaps we eventually come back down to this order block and also the bottom of this bigger channel in yellow. And this order block comes from all the way back to our peak in 2017 and the start of that bear market from this green candle in a downtrend. There are some other important order blocks on the 3 and the 4-day time frame, and they also come from this area here and also from this area. So we'll just look at those side by side and show you those 3 and 4-day time frame order blocks. So here we are. This was the peak of the 2017 bull market here at around 20k, and this is our current price action. I am on the 3-day time frame here for both charts. We can see we have a 3-day order block here from this red candle in an uptrend, and also this bigger order block from this green candle in a downtrend. The blue one is the 4-day order block. It is this entire range. The 3-day one is inside the 4-day one. You can't see that at the moment because we're on the 3-day time frame. These are the key order blocks here over each of the different day time frames. And we can see we are pretty much in between both of these 3-day order blocks at the moment. We've wicked into this one a couple of times. This is also the 4-day order block. And we have had decent bounces from that, but we are currently getting resistance on the 3-day order block here. We can just zoom into that to see that a bit better. Just zoomed in now, we can see how we did wick into this 3-day and 4-day order block. And I do believe there's also a 5-day order block right at the top here. So these order blocks on 3 different time frames, pretty much catching the bottom of these wicks. But at the moment, we weren't able to reclaim this 3-day order block on this bounce. We got resistance. We're getting pushed back down. So perhaps we do come back down here and retest this 3-day order block again. The top of this 3-day and 4-day order block is at 15,750. The bottom of the 3-day order blocks at 14.6k. And the bottom of the 4-day order blocks at 13.8k. But at the moment, these are the 2 order blocks that we've been bouncing in between. And again, if we are able to close above this 3-day order block, above 16.7k, then we would expect a bit more of a bounce. We're just going to switch to the monthly time frame quickly here. I just want to show where that 5-day order block is. It does actually come from this area. We will look at it in a second. So this 5-day order block, it does line up pretty much where we did wick down to. You can see it wick down into both of these order blocks here. But what's interesting is in that 2014 bear market, there's also a 5-day order block here. And we did see it did capture pretty much the bottoming area of the bear market. We'll zoom down to the 5-day time frame to show you that. So here we are on the 5-day time frame. One of these order blocks here comes from this red candle in an uptrend, and the second one comes from near the peak of the 2017 bull run from this green candle in a downtrend. We see it pretty much captured the current bottom here. We did wick into these order blocks several times. We haven't closed inside them or below them yet. These order blocks are between 15.7k and 15.3k. Just going back to the 2014 bear market now, and if we look at the 5-day order block from there, we did have this strong bull run, just one order block here. Just looking at that order block, we see on the initial drop, we did drop below it, but we closed above it. We wicked into it again here, and then on that second capitulation, we got quite close to the order block, didn't touch it, but this was pretty much the bottom without any 5-day candles closing below this order block. And again, just showing you that because we also have that 5-day order block with our current bear market, and we are at that level. Over to a market cipher now. We're on the 12-hour time frame. We do see that money flow going deep into the red here. We need to see it start curving back around. We do have this small blue wave here with a green dot currently present. Won't be confirmed till the end of the day. But quite often when we get this bigger blue wave and a really small blue wave here, can be known as a trigger wave. It does quite often mean that we will have a move to the upside. The money flow again is pretty deep in the red. We'll have to see how that plays out. The daily time frame now, we did have this red dot. It did get confirmed. We need to see a green dot on the other side. The 2-day time frame did get a green dot. It did get confirmed on the 27th of November. The 3-day time frame was quite close to getting a green dot here, but we haven't got one yet. Next candle is at the end of today's price action on the 30th of November. We need to see these green dots build up on the 3-day and higher. We have it on the 2-day time frame. The 4 days also getting closer here to a green dot. The next candle is until the 3rd of December. The 5-day is similar here. We do see they're all starting to curve around, but we need to see them build up first on the 3-day, then the 4-day, then the 5-day. And this might take another couple of weeks to see them on these more higher term time frames. Same with the 6-day, we are getting closer, but we need to see those green dots build up on the smaller term time frames first. And the weekly is still coming down here. Now the 2-week does have a red dot present currently, won't be confirmed till the 5th of December. And the 3-week is pretty flat here after getting that green dot confirmed all the way back in the 3rd of October. And finally, the monthly, we see it starting to curve slowly here, but it could take a couple more months before we see that monthly green dot, perhaps January or February. We can see it did get the bottoms fairly well here in the previous bear markets. After we got the monthly green dot here, we started the next bull run in the 2014 bear market. The first green dot did have this flash crash, so it didn't exactly indicate the start of the bull run, but the second one did here. So we are getting closer to that, but again, it might take another couple of months. And again, with that comparison between both bear markets, 2014-15 bear market down the bottom, our current bear market on the top, we can see we are waiting for that 4-day green dot, which on this occasion did indicate the next dead cat bounce. And we need to see these green dots start building up, as we mentioned, on the 3-day, 4-day, 5-day, 6-day, and the weekly again. If we do get those green dots build up over the next week or 2 weeks on the 3, 4, 5, 6-day time frame, possibly the weekly, it would line up with this time frame where we get another dead cat bounce going into the end of the year. And eventually we get that monthly green dot, possibly in February. Once we get that confirmed, that would put us around this area. And we might also see that 4-day money flow flip into the green. And we might finally start the next bull market, possibly starting at the end of March, early April. But I think that's about all for today. I hope you enjoyed that analysis on Bitcoin Mamo. I'll see you next time. Bye.